First, on the specialty sectors in the U.S., probably my single best idea in the U.S. today is senior housing. Unfortunately, it's just not a huge sector, but you can still develop senior housing to about a 9.5% yield, stabilize that's a 5.5% sale. And so that's where we've gotten some of the returns Rob's talked about. In terms of U.S. capital coming to Europe, the interest really started 2 years ago, with the thought being the Europe recovery is behind the U.S. That interest is still there. People believe that's still the case. The negative sovereign debt yields in Europe helped that case, but we're still seeing a lot of interest from Europe. And the one, just in terms of capital flows, I don't know, I had to step out for a little bit, but the one thing we're watching is sort of the oil-producing sovereigns, who have been big buyers, certainly of the Uber core. And then we're watching to see if that kind of comes back or backs off. The one market we've seen a dead halt to, we don't participate in it, but it's the ultra high-end condo market in New York City. That's kind of just dead stop. I mean, it went from $50 million condos going out like crazy and is now at a dead stop. So that might be a sign. And then last comment, just in terms of why I think the interest in real estate is continuing globally. First of all the volatility is great for real estate. A private real estate portfolio is sort of a sea anchor in your portfolio, and people migrate toward income when they're getting capital values bounce around, and real estate still has that income. And then the last thing, I think people mentioned rational, debt's been rational. I don't know if it was mentioned, but the big thing for me is supply has been rational. And supply is really what killed the last cycle.